Hey, what's going on, guys, and welcome back to another video. Now this one we're going to be going over the Forex trading for beginners. This is episode 2, so we're going to be going over the currency pairs, the majors, the crosses and exotic currency pairs. So stay tuned and I'll see you on the next slide. So moving on to the first slide, we have the currency pairs. Now there's 3 different types of currencies. You have the major currencies, the cross currencies and exotic currencies. So I'm going to jump into them and just show you quickly what they mean. So major currency pairs. So what I mean by major currency pairs, they are the most liquid, the most volatile and usually recommended to trade, the most popular ones to trade, right? So it contains the euro dollar, the pound dollar, the dollar yen, the dollar Swiss, the dollar loonie, Aussie dollar, and also the Kiwi dollar. So pretty much these are the major currency pairs. These are the most liquid, these are the most volatile, and these are the most active trading currency pairs. And yeah, that's pretty much it in a nutshell. Moving on to the cross currency pairs, so we have the euro crosses, yen crosses, and the pound crosses. Now, a cross currency pair is one that consists of a pair of currencies traded in the Forex. It does not include the US dollar. So remember that the crosses do not include the US dollar. Common cross currency pairs involve the euro and the Japanese yen and the pound. So the euro crosses, as you can see, is the euro Swiss, the euro pound, euro Aussie dollar. The yen crosses are the euro yen, pound yen, Aussie dollar yen, and then the pound crosses are the pound Aussie dollar, pound New Zealand dollar, and the pound Canadian dollar. So moving on to the exotic currency pairs. First, the exotic currency pairs are liquid, like market depth, can be extremely volatile, and trade at low volumes. Exotic currency pairs are usually from developing countries or emerging market countries, and they are often subject to partial or total exchange rate controls that render them non-convertible. Now, I do like volatility in the market, but as a beginner, I would recommend to just stick to the major currency pairs, as they are your pretty much best off starting point. So when you do come into the market and you start looking on the charts like TradingView, just look at the euro dollar, look at the pound yen, just look at the major currency pairs and just focus on them. Now, as you can see, there's some exotic currency pairs listed below. You've got the euro Turkish lira, you've got the pound sterling South African rand, you've got the Australian dollar Mexican peso, the US dollar Thailand baht, and you've got the Japanese yen and Norwegian krone. Now, some pairs I've personally traded that are exotic, so the US dollar Mexican peso. That's an exotic currency pair that I personally do like to trade every now and then, and a couple of others. But when you first start out, just start off with the major currency pairs and just pick 2 to 3 pairs to study that with. So yeah, let's wrap up this video, a quick review of this video. So the major currency pairs are the most liquid and volatile, and that's what I recommend you to start on when you first come to trading. The cross currency pairs, I know I spelled that wrong, I didn't mean to put the E, but the cross currencies do not include the US dollar. And lastly, the exotic currencies are mostly from developing countries or emerging market countries. But yeah, that's pretty much it, guys. Quick video explaining currency pairs. If you have enjoyed this one, please leave a like, and let's see you on the next one in episode 3.